All right. Good morning. Welcome back here to Trader Minute. Great to have you aboard. I want to go take a look at a few things. We'll take a look at our trades. I'll show you a couple other things that I'm eyeing here today, and then let's go take a. But let's start off by taking a look here at CLIR. I apologize for the double feedback there. Hopefully, we have that resolved here. Okay, let's go take a look here at CLIR. Now, CLIR, Clear Sign Combustion Corp, very interesting company as far as what they do. Essentially, they're in the kind of fuel business where they're trying to reduce emissions, pollutants, and they do it by a technology that they're using uh, to basically induce an electric current into the actual combustion that is going on with whatever's being burned, and they're able to control the pollutants that are emitted by reforming the shape of the flame and some other technologies that they're using to essentially reduce emissions. They aren't the only one out there doing it. There are several others. One that's been around a lot longer is Fuel Tech, FTech. Here, you can see here from a technical standpoint, Fuel Tech, pretty much doubling from November to December. Uh, in a similar way as CLIR, only CLIR a little bit later. Okay, Fuel Tech took off, then CLIR took off, and a lot of this, I mentioned when we first talked about CLIR that it could be a pump and dump type of a thing. I was able to go back and verify that there was a website that was promoting CLIR aggressively, very aggressively, and that corresponded directly to the move higher in the CLIR stock. Okay. Now, does that mean there's something wrong with CLIR? Not necessarily. Okay. Just because it's being pumped aggressively doesn't mean it's going to get sold aggressively, but the risk of that happening is much, much higher. Okay. Whenever I'm looking at something like CLIR, what I'm looking for is what are the risks. Okay, there are projections out there that talk about CLIR going to 20, going to 30, even going up above $50. And a lot of those projections really come down to what the revenues and what the growth is in the company going forward. If we take a look at CLIR from just a balance sheet or from more of a fundamental standpoint, okay, you'll notice they're not making any money. They're losing money. Okay, they're not a huge company. Okay, pros to this are that buyout potential. Okay, this type of company can easily get bought out by somebody like Fuel Tech, by a bigger company that is looking to reduce some of their emissions or basically looking to gobble up the technology and the patents that ClearSign has. So that's the advantage. They're small enough to get bought out. The disadvantage, okay, the disadvantage here is that they are needing funding, right? They're losing money. Okay, they're losing money. And a lot of times what will happen with stocks like this that make huge runs is at these run points, the company will say, you know what, our stock is high. We can now release more stock, get a lot more cash, and fund our operations for even longer. Okay, so that's kind of the risk. Is there anything confirming that either of those things will happen, a buyout or a need for more cash? No, there is no confirmation on this, okay, on either of those, but those are the two things that could potentially happen. Both of which would be fundamental drivers, where the technicals aren't going to give you any clue as to what is happening and as to what is going on in many ways. CLIR and kind of going through and digging through this reminded me very much of SBAC. Very different type of company, SBAC, back here in 2003. SBAC built cell phone towers, and they were basically losing money. They were on the verge of bankruptcy. They had negative cash flow. They were needing more funding. And the question was, are they going to go through bankruptcy? And SBAC made this move from a stock standpoint, 0304, where basically investors said, okay, they're not going bankrupt. They got some additional deals to build more cell towers with Verizon, and that kind of took them out of that danger zone and got them pumped. And through this time, there was talk of pump and dump and penny stock and the normal stuff that's out there. But you'll see how SBAC has grown over the years, almost trading up around $88 here today. Why has it grown? Well, it's grown because its business model has finally come to where they turned from needing funds, needing cash to, hey, they're actually bringing cash in. They have the business and they're running it. For CLIR, this is what they are going to need. CLIR is relatively new. Basically, they went public to try to raise cash to keep things going. Okay, so with them still not being in a profitable position, the question is, do they still need to raise cash? For me, that would keep me out of CLIR, make me very wary, very nervous of the stock. The technology seems really cool. In fact, the more I looked at some of the technology and everything, it looked really cool. But the future direction of CLIR really is going to depend on the fundamental events that happen going forward. I'm convinced that most of this run in CLIR is due to some of the pumping that was going on with it. Okay, I'm convinced that most of this run was due to that. Now, there are some other factors that contributed to it that you could argue, but just from a pure price action standpoint, that's what I think. I think the risk of a strong pullback is very heavy. At the same time, with any of these, you can see this double again. The price action can be that crazy, but it is something that if they were to come out and say, "Hey, we need more money. We're going to release more stock." Let's say they release it at $10 or $9, and the stock then kind of dips and falls back into the $8, $9 range. It is something that I think may be worth buying after that, after some of those risks may be off of the table. Now, if you're waiting for that, you're probably going to miss the overall, any more upside. But from a price action standpoint, from a fundamental standpoint, this isn't something I would be very comfortable being a buyer of right here. Okay. The other thing you have to keep in mind with CLIR, look at the volumes. Volumes have been 300,000 recently, but normally they've been down in the 30,000 a day range. What does that mean? Okay, well, take a look at CLIR here, and I just have the bid and the ask. Okay, the stock is bidding at 1045, asking at 1050, and it's doing so on light volume. Notice 1040, 1037. You're not seeing a whole lot. The market makers really aren't putting a whole lot into this. So what happens is now it's gone to a 10-cent spread, a 9-cent spread. If one person or one institution comes in, even with something like 100,000 shares, and decides they want to sell, it could drive this stock down 5, 6, 7% just on that sell order. Okay, which is probably why some of the move has been ultra aggressive to the upside, is because it's used to such lighter volumes that those heavier volumes and the larger spread have really kind of created an overreaction to the upside just from a pricing standpoint. Okay. Do I think there's some decent stuff going on with the company? Absolutely. Do I think it could be a fun one to kind of hold over the years? Sure. but this isn't something I would look to be a trader of. It's something I'd look to be a longer term investor of. And for me, okay, I would need to see that, hey, some of the risks, the financing risks are off the table, and some of this price action here either be confirmed with a consolidation or get some sort of a pullback on some sort of news to where, a lot of this fever and flurry is now out of the stock. Now, as I looked at CLIR, obviously that took me to FTech, okay, Fuel Tech. This is one that has moved similarly, okay, big volumes. You see what the pullback has been. 9.5 down to 7.5. Doesn't look very much, right? But you're in it. It's painful. This is a little bit of a bigger company, Fuel Tech, doing very similar things. They have been around for much longer. Okay, much, much, much longer. They are actually making a little bit of money now. They have more cash on hand. The chances of them needing more financing is much smaller than with CLIR. Okay, again, it's very much a gamble type of a play, but it's one that is kind of pulling back a little bit earlier in the game. This is one where I looked and I said, you know what? Maybe if it gets back to 7, 6.5, somewhere in that area, maybe worth starting to pick up a little bit from a long-term standpoint. They have a book value around 4. For whatever you want to put in, book value with cash at about 1. So you're looking at, you should see some support around 5 if it were to get there. I don't think it pulls back that much, but I would almost rather mess with Fuel Tech than CLIR, given what is going on with those companies. I think CLIR has a little bit higher upside if everything plays out well, but it also has much greater downside if things don't play out in a rosy ideal scenario there for CLIR. Okay, so that's just my thought on CLIR after I kind of went through it and some of the research that I did there on CLIR there. Okay. Yeah, Matt, you received a brochure pump in CLIR. Yeah, absolutely. I was able to kind of confirm that was going on. That was the case, and that is that. While I'd like CLIR, what they're doing, just the price action matching with that, and not really a whole lot of other stuff. It's a tough one to want to be a buyer of here. I mean, the price action on Tuesday, big up, big down. You can say, well, Tuesday's a low volume day in the market. Well, sure, but it wasn't a low volume day for CLIR. So that reversal Tuesday was quite significant. Okay, quite significant overall. A lot of these types of reversals that we have seen this year have actually consolidated and then gone lower. Okay, so they will get a few up days and then go lower, not just go straight down. So I wouldn't, if it pops back to 11, 11 and a half, I wouldn't necessarily look at that as an overly bullish sign there. Okay. All right, so CLIR, Fuel Tech, there's a few others in the mix there, but it's an emerging type technology, and there's always going to be extra volatility and extra risk, and a lot more fundamentals than technicals involved there. Okay. All right, let's take a look at our positions. Let's start with the Vibe and Trend Rider trades. Chesapeake. CHK here, down about 34 cents. Still holding on to the 7. Light volume. Chesapeake was up 20 some odd cents on Tuesday. Wasn't significant. Down 30 cents here today. Not really that significant. Chesapeake holding 27 is what we need to see. A breakdown below 27 would be very bearish here, or kind of take off the bullish signals here for Chesapeake Energy. But where it is right now, there's just nothing there. Nucor, steel company, up about 15 cents here. Nothing here. Light volume, not really even trading much today. Really just kind of staying in the upper band and really kind of one of those marking time types of days. Boeing here up about 90 cents. It's about 30 cents off of its highs. You see it on a daily chart, still in the trend rider, still in the vibe uptrend. Okay, still in a very bullish mode, though albeit very light volumes. Okay. If you look at it from an hourly perspective, we're coming to a short-term resistance point up here at 138. 138 is where Boeing gapped up to on the real good news of the stock buyback and whatnot, and pulled back. Then 138 is where the reaction high was after the Fed, a day after the Fed went up to 138 before pulling back. Now it's retesting 138 again. Notice how each retest, in fact, let me see if I can zoom in here for you. Notice how Boeing here is at 132, then goes to 138, then it's at 133, then goes to 138, now just pulls back to 136 and going to 138. The lows continue to get higher as the highs kind of stay. This is generally a bullish pattern, but we can mark time here between 137 and 138, for several hours, maybe even a day or two. A close above 138 would be very nice here, very strong and bullish for Boeing overall. Boeing is getting a lift a little bit here today from stocks within its group like Lockheed Martin and Raytheon and Triple L and Northrop Grumman, as the rest of the sector remains pretty much white hot here. Okay. A couple other things to watch. I mentioned on chat Qualcomm, okay, QCOM here. And Qualcomm makes components for Apple, many other companies as well. Qualcomm had a beautiful surge here in November. Just a beautiful surge. It has been consolidating. It kind of ripped lower the one day, kind of came all back here with the Fed, and has been able to hold on to 72. This has been a relatively common pattern amongst stocks in 2013 and has generally been extremely bullish. A break above 74 would be the confirmation that Qualcomm's ready to move and ready to move higher. This looks very similar to the consolidation back here in August on Qualcomm. Okay, can you buy it here? Sure. What's your danger? Well, market time. Consolidating, maybe even a pullback to 72. That's kind of your danger for trying to be a little bit anticipatory of a breakout. This type of stock trading in the low 70s, generally when they break out, they tend to try to migrate towards 80. And that's kind of where I would look for Qualcomm to go. Is today's action significant? No. Is Tuesday's action or Monday's action significant? No. The significant action is November's rally, the consolidation, and hey, we are going to have catalysts to move the market and volumes returning here shortly. And hey, any of these stocks that are starting in these breakout modes could break out aggressively. And that's kind of Qualcomm. If you want to be anticipatory, you're getting in now. You want to be a little safer. Wait for a break of 74, and Qualcomm to the upside sets up fantastically. Okay. One of the sectors that has been on fire this year is the biotech group. Okay, it's a tough group to trade simply because there's a lot of news. Okay, but the stocks have been on fire. Celgene here has been on a major uptrend. Volumes continue to be strongly bullish. It finally had a pullback from 170 to about 156 and had this high volume snapback rally. It's been consolidating right here around 170 in a very bullish pattern. You have even a bullish kind of tri-star candlestick continuation pattern here. You just have a lot of bullishness here, using 165 as a stop here on Celgene for those that want to kind of trade this upward trend higher here. And Celgene is offering a very interesting entry point here today. Are you going to miss the breakout if you don't get in today? You could. That's obviously the risk, but it's consolidated enough here that to see it just go straight up from here is definitely on the table there. Okay. If you take a look at some of the others in its group, like Amgen, Amgen here, all signs of breaking down, right? Trend rider bear, breaking of the upward trend. You start to see a little more volume come in, and even Amgen, with all that, has not been able to break down. Okay, and these stocks that have failed to break down, these sectors that have failed to break down when they've had their opportunities, have not only gone higher, but they've flown higher. So Amgen, kind of that same as Celgene type of a group. You have something like Bristol Myers Squibb, okay, which had that nice little breakout here. It's had the consolidation back towards the 7-day moving average. This is very much like Celgene, right? In its price pattern and its price action, and is quite bullish in its nature. Okay. Getting out of that group, you go into tech. We talked about Hewlett Packard on Tuesday, how they are going to be releasing some new tablets to the market. They're going after a little bit of a different market. They're going after a low end price point, the $200 price point, a little smaller versions, and to try to truck back into the group. Hewlett Packard is not a company I've been very fond of here overall, but after significant underperformance in 2011 and 2012, 2013 this has been a resurgence back from the dead for Hewlett Packard and setting a new 52-week high. On this news, volumes generally good upward trend. Bodes very well here for Hewlett Packard. Does it have to move right here, right now? Not necessarily. You do have Bollinger's contracting. We could consolidate just a little bit longer, but anything kind of in the low $27 range, if we're fortunate to get a little bit of pullback on Hewlett Packard, could be a very nice buy opportunity overall for it. Okay. Yes, Steve, we don't do biotech, LOL. Yeah. Well, Steve, you got me watching it a little bit more. And, look, I'll be the first one to tell you I have no idea what's going on fundamentally, what's going on in the labs, what's going on with the meds with Celgene. I have no idea. I do know what the chart looks like. Would I trade it? No. But there have been many of you that have made some really good money in these this year. And, from a technical standpoint, they're showing some good signs again here. Okay. Yeah, Chesapeake, if you're not in, is this a good place to enter? Um, the stop here with Chesapeake here is 27. Okay. That's kind of the stop. So looking at it from a pure risk reward standpoint, what are you risking? You're risking about 30 cents to get into the trade. Okay. 30 cents for what type of upside? Where can Chesapeake go? Chesapeake, I expect it to move into the 28.5 area. Carl's expectations are similar. So, you're looking at about a $1.20 upside for about 30 cents downside. That's a pretty good ratio. That's a pretty good risk reward ratio overall there, even if your odds of the trade working are 50-50. Okay. So in that perspective, I like it. What are the odds of the trade working? Well, I don't think the price action from Monday, Tuesday, or today is of any significance at all. It has very bullish indications. It has vibe and trend rider aspects to it. My one concern is this breakdown here on earnings. The earnings were pretty good, but we had a negative reaction. These always make me a little bit nervous, but in 2013, a lot of these have gone higher, and this is the first negative earnings reaction. Market's more likely to forgive a one-time one-time miss. Chesapeake had been hitting their earnings, and fundamentally, and some of the transformations going on in the company are fantastic. So long term, fundamentally looks great. Risk reward looks great. I couldn't argue popping in here into Chesapeake. You may be able to look hindsight and say, well, I could have gotten it at 27 just because of the way the volumes and the price action has played out on some of these kind of non-volume days here in the overall market. I was asked about Triple D, and in Triple D we talked about this Tuesday, a little bit on Monday. Tuesday pulled back. Today shooting just the same higher. This is the kind of stock, and Triple D has done this before, but it's one of those where you're basically if you're buying Triple D, you're buying it knowing you're gonna hold it come hell or high water. As it goes up. If it pulls back, fine. You're actually looking at that for an entry point, not a sell point. But it does make it very tricky and very difficult to play. The overall price action remains strongly bullish. The trend remains strongly bullish, and the price action suggests 100, suggests that it wants to go and hit up into triple digits here for Triple D. PXD here. PXD here. Pioneer Natural Resources had a real strong pullback, right? Heavy volume overall. Triggered a trend rider bull signal last week. Has pulled back a little bit. Had some pretty good volumes come in Friday and Monday around options expiration. You're getting a little bit of a bullish engulfing here today. Can you be a buyer of PXD? Yeah, I would use, if I were buying PXD, I would be very cautious with it, and I would use today's low as a stop. I'd be very tight with that, and say, all right, we're ready to bounce and ready to go higher from here. The danger with something like PXD is an ABC type correction. So you get an A leg down, you get kind of a retracement or relief rally up, and then you get that final pullback, that last leg lower, your C leg down here under the 180 mark before it's ready to really go. That's kind of the danger here with PXD. Okay, kind of the same type of concept as with Archer Daniel Midland, ADM on an hourly chart that we were talking about in chat with Max earlier. And you get the pullback. Now you start to get the rally, right? Okay, fine. But you have this A leg down, this B leg higher, and a lot of times you'll get another C leg down that completes a retracement of the prior upward trend. That's the danger here. Okay, that's the danger in buying some of these that are showing a little bit of strength here today and on very, very light volumes there. Okay. I know one of you mentioned hourly chart on Chesapeake looks ugly. Okay, yeah, I mean, when you're in a trade, let's say you're basing on the weekly chart, you're going to go through periods where the hourly or the 15-minute or some sort of time period starts to look ugly. Okay, so when is it to say, hey, the hourly looks ugly, we got to get out, or hourly looks ugly, but it's consolidating? And here with Chesapeake, here hourly, yes, breaking down. You got MACD, Stowe. You have some downside action here, but you have this support here in the 2720, 27 area. Okay, that you would expect some of the uglier action to start to abate and start to move higher here. Just take a look at the hourly chart right back here in the 17th and 18th. I mean, the hourly chart even uglier back then than what it is now, coming down to the support level. Okay, flips and turns, and so as you're in a trade, the various context of the charts, from 1 minute to the next can look ugly or look really good. Something like Boeing here, right? I mean, the hourly chart just on Tuesday looked very much like what the hourly chart on Chesapeake looks like today. And below the 7 hour starting to break down, MACD falling, Stowe falling. Doesn't take much to kind of change that. And that's why we're kind of basing it a little bit more on the daily and just kind of zooming in a little bit to the hourly to say, hey, what's kind of happening here. Okay, Diamond Energy, Richard, Fang. Yeah, Fang here is not a stock that I follow. I have heard of it. I've seen it. I've pulled up a chart in the past, but it's nothing. I couldn't really even tell you what their niche is in the energy sector. Okay. We are talking about a low volume company. We're talking about a small cap. We're talking about one that's going to have exaggerated moves. It's not going to trade. Uh, you even see some of the wicks on the candles, right? The heavy wicks on the upside and downside. $2 moves on Fang aren't necessarily significant. Okay. Now that all said, this is a bullish type of reaction. You get the breakdown here in November. Let me zoom in. Okay, you get the breakdown here in November, December. Okay, now you get the bear trap. Okay, bears get trapped here, starts to trade back up above 50. A lot of these have just continued to go higher this year. The volumes on Fang, the elevated volumes on the buy would support that Fang is ready to go up, okay, and ready to go higher. At the same time, to see it pull back or consolidate back in between 50 and 52 for a little while wouldn't be out of the realm of possibility. So it really, with Fang, to me, just comes about picking a good entry point or finding a good entry point at a price level that you like. Maybe you come into the hourly. Do you say, you know what, hourly's breaking out here, let me get in? Or do you wait for it to come down to the lower Bollinger Band on the hourly and find some support? Really comes down to your risk tolerance and how much you really like the company and like the stock overall. But overall trend remains very positive. The sector overall remains very positive. It's had its pullback. To see it go to brand new highs, you know, just from its history, wouldn't be very difficult. Okay. Yeah, JDSU. Okay, yeah, JDSU. Let's go take a look at JDSU. We looked at this a little bit on Tuesday. And JDSU here, beautiful move on Tuesday, pushed higher, trend rider bull signal. Today's action is what I would classify as absolutely insignificant. Um, what it basically tells me is Tuesday's reaction, or you know Tuesday's action here on a light trading day, was a little bit of an overreaction to the upside. Now we're getting a little bit of correction of that. Is that bearish? No, not at all. Not at all. But it's nothing that I would find to be anything that would be worth really reacting to. Okay. Um, you do have a little bit of pullback. Could you go to 1280, even 1260? Sure. But with JDSU, you're talking about some bullish signals off the bottom, okay? But again, you're messing with a stock who had a very negative earnings reaction and earnings slide, and those can be dangerous. You never know when those sellers are gonna jump back in aggressively and start to push things lower there. Okay. Yeah, the refiners, Tesoro. Okay, Tesoro broke above the 58 and a half here, or excuse me, the 58 and a half area this morning. We've been talking about if it breaks that area, we'd like to pull a little off of Boeing and get into a little bit of Tesoro. We didn't do that. The reason that we chose not to do that right here on the open today when it happened is because of the just incredible light volume, the risk of some sort of just snap back down very high. Don't really find a lot of today's action so far to be significant. Okay, there was no real catalyst here. Nothing was in the news on it over the last several days, and we just wanted to kind of make sure. Is it still bullish? Absolutely. It's still in a very, very bullish position. Tesoro is. Um, can it dance between 57.5 and 58.5 for another 3 days? Sure, but it's still in a very bullish pattern overall. WNR, Western Refining, same thing. It's in a bullish pattern overall. It had the trend rider breakout. It's okay, pulling back on no volume, very very negligible. I would love to see WNR not being in the trade. Would love to see it come down to about 40 and a half. And then I would almost think of, instead of pulling a little bit of Boeing off and getting into Tesoro, pulling a little Boeing off and getting into Western Refining. But we're not even here with something like WNR in the short term. We're not even at a retracement area. So to see it come back here and to battle into what was resistance, to come back and test that as support in the retracement area down about 40 and a half, even 40, that in the short term could be what we see on Western Refining. And that would not necessarily be bearish for WNR, but really be more of an entry point to the upside for the stock. If we go across the sector, something like Valero, similar. Valero outperforming a little bit, but similar, type of principles as far as the insignificant price action. Gas prices. You can pull them up with the UGA, the U.S. Gasoline Fund (UGA). You'll notice kind of the resurgence here in gas prices, and that bodes well. Now that is going with a little bit of resurgence in oil, so the crack spreads aren't improving tremendously, but they are improving enough to say, okay, Tesoro and Valero and Western still have a lot of upside left to them. Okay. All righty. Well, thanks for hopping on. I will be back on here in about an hour to start with the technical analysis, and we'll go out and start to take a look at that, some of the principles behind that. And till then, John will be on chat here with you, and we will go from there. Talk to you soon. Take care.